much can you see here? How's the time? Hey!
A Friday afternoon in June last year.
Look, you know what? This thing has changed so many times. I'm just reading what you want me to read.
A titan of Wall Street prepares to address his staff in New York, London, and around the world. He wants to put an end to rumors that the firm is in trouble. Crisis? What crisis?
Every one of you should feel confident and proud. Our firm is strong today, and we will emerge from this cycle even stronger. We've done it before, and we will do it again.
What if I told you that the dramatic downfall of Lehman Brothers in 2008 rippled through the economy, triggering a $600 billion crisis? In this video, we're unraveling the story of the Lehman Brothers and how its actions led to one of the biggest financial disasters in history. Stick around, because by the end, you'll uncover the hidden decisions and critical mistakes that led to Lehman Brothers' collapse, and why understanding this is essential for navigating today's financial world. Lehman Brothers was founded in 1844 by Henry Lehman, a German immigrant who started a dry goods store in Montgomery, Alabama. Joined later by his brothers Emanuel and Mayer, the firm expanded into cotton trading, laying the foundation for what would become a financial empire. By 1858, Lehman Brothers had moved to New York City, and through the 1880s evolved into a leading commodities trading company. The firm's keen insight into emerging markets helped it grow steadily, establishing itself as a major player on Wall Street. Lehman Brothers' ascent to financial dominance was fueled by a diverse range of key financial services and products that set them apart in the industry. From investment banking and asset management to trading and underwriting, Lehman Brothers offered a comprehensive suite of services that catered to the evolving needs of clients worldwide. By the mid-2000s, Lehman Brothers had become one of the top investment banks on Wall Street, with its investment banking division generating significant revenue. In 2007, Lehman Brothers reported net revenues of $19.3 billion, with investment banking alone contributing $3.7 billion. The firm's asset management division managed over $275 billion in assets, demonstrating its capacity to attract and maintain a diverse clientele. But the heartbeat of Lehman Brothers' financial empire lay in its trading and capital markets operations. In 2007, the fixed income division generated a staggering $7.7 billion, almost 40% of the firm's total revenue. This was no mere contribution. It was a vital force, driving Lehman's dominance in the bond markets and providing essential liquidity. Meanwhile, the equity trading division added its own significant value, contributing $2.4 billion, or 12% of the firm's annual revenue. These divisions were more than just revenue streams. They were the engines that powered Lehman Brothers' ascent, cementing its role as a leading player on Wall Street and revolutionizing market dynamics. As the housing market boomed in the early 2000s, Lehman Brothers aggressively expanded its mortgage and real estate investments. By 2006, Richard Fuld, the CEO of Lehman Brothers, was at the helm, guiding the firm through its aggressive expansion. Fuld, known for his hard-nosed leadership style, had been with the company for over 30 years and was instrumental in transforming Lehman into a global financial powerhouse. Under his leadership, Lehman Brothers significantly increased its exposure to the mortgage market. The firm became heavily involved in subprime lending, loans given to people with poor credit. These high-risk loans were bundled into mortgage-backed securities and sold to investors, including Lehman Brothers, which invested heavily in this sector. Despite its outward appearance of financial dominance, Lehman Brothers faced a series of warning signs and internal struggles that foreshadowed its eventual downfall. Indicators of financial instability, such as excessive leverage, reaching a ratio of 31-1, exposure to risky assets, and a lack of liquidity began to surface within the firm. By 2007, trouble began to emerge as the housing market started to cool and mortgage defaults increased. As borrowers began to default on their loans at an alarming rate, the value of these securities plummeted. Lehman Brothers, having bet heavily on the continued growth of the housing market, found itself holding massive amounts of devalued and toxic assets. The firm faced significant financial strain as the defaults led to severe losses, eroding investor confidence and exacerbating its liquidity crisis. Eventually, Lehman Brothers reported a significant loss of $2.8 billion in the second quarter of 2008, primarily due to its mortgage and real estate holdings. Additionally, the firm's stock price plummeted, and it struggled to maintain investor confidence. Despite efforts to raise capital and offload toxic assets, the Lehman Brothers' financial situation continued to deteriorate. As the housing market crisis deepened and the subprime mortgage bubble burst, Lehman Brothers found itself heavily exposed to toxic assets, with mortgage-related assets constituting over 70% of their total holdings. On September 15, 2008, despite efforts to secure a lifeline from potential buyers or government intervention, Lehman Brothers filed for Chapter 11 bankruptcy after losing 93% of its market value, marking the largest bankruptcy filing in U.S. history. The collapse of Lehman Brothers sent shockwaves through the global financial system, resulting in a liquidity crisis and contributing to the severe economic downturn known as the Great Recession. Credit markets froze almost overnight, with banks and financial institutions becoming extremely reluctant to lend money, even to each other. This reluctance led to a severe tightening of credit, impacting businesses and consumers alike. The Dow Jones Industrial Average plunged 504 points, equivalent to a nearly 4.4% drop. This was the largest single-day point drop since the aftermath of the 9/11 attacks in 2001, underscoring the severity of the financial panic and the widespread fear among investors. The repercussions of Lehman Brothers' bankruptcy were evident in the financial markets across the world. In the wake of Lehman Brothers' collapse, the U.S. government and Federal Reserve took unprecedented steps to stabilize the financial system. Major banks received bailouts, and new regulations were introduced to prevent a similar crisis in the future. Amid the chaos, the Federal Reserve stepped in with an additional $85 billion bailout for AIG. This decision was driven by AIG's critical role in the financial system, largely due to its extensive exposure to credit default swaps. The Fed's intervention aimed to prevent the potential chain reaction of failures triggered by AIG's collapse. In stark contrast, Lehman Brothers, despite its substantial size and impact, did not receive a similar rescue. The U.S. government, grappling with the financial crisis, had approved the $700 billion Troubled Asset Relief Program to stabilize the sector by purchasing distressed assets and infusing capital into banks. However, Lehman's attempts to secure government assistance were hindered by regulatory challenges and concerns about moral hazard. As a result, Lehman Brothers' bankruptcy went unresolved, highlighting a critical juncture in the crisis where systemic risks were managed unevenly. The legacy of Lehman Brothers' downfall remains a cautionary tale for financial institutions and investors. It underscores the importance of prudent risk management, transparency, and regulatory oversight in maintaining a stable financial system. Understanding the rise and fall of Lehman Brothers provides valuable insights into the complexities of the financial markets and the far-reaching consequences of corporate decisions. For today's investors, the story serves as a reminder to prioritize due diligence, diversification, and risk management. By learning from the past, we can better navigate the financial challenges of the future. Thanks for watching our deep dive into $600 billion disaster, how Lehman Brothers shook Wall Street. If you were inspired by this billion-dollar tale, please like, share, comment, and subscribe. We love hearing from our audience, so let us know your thoughts and what stories you'd like to see next in the comments section. Your engagement helps us bring you more insightful content about the pivotal moments that define our world. For another billion-dollar tale on the $10 billion merger that changed Wall Street forever, please click here. Stay tuned for more insights and stories that shape our world. See you in the next video.